In this video, we're looking in depth at the BNB token, its future prospects being in the SEC crosshairs, what exactly is OPBNB, and also could we see a return to and also maybe surpass the previous all-time high of around $650. BNB token, or Binance coin, was created in July 2017 and is the native cryptocurrency of Binance, which is one of the world's largest cryptocurrency exchanges. Initially, BNB was launched as an ERC20 token on the Ethereum blockchain, as BNB back then did not exist, or the BNB chain. It served primarily as a utility token within the Binance ecosystem, offering users discounts on trading fees and also participating in token sales hosted on the platform, similar to one of its use cases today. However, in April 2019, Binance conducted a token swap, migrating BNB from the Ethereum blockchain to its own blockchain called Binance Smart Chain. With this migration, BNB became the native asset of the Binance chain. Binance employs a token burning mechanism to manage the supply of BNB and increase its scarcity over time. Every quarter, Binance uses around 20% of its profits to buy back BNB from the open market and subsequently burn or destroy those tokens. This process will continue until 50% of the total supply of BNB, which is 100 million tokens, is burned, making BNB a deflationary asset. The burning mechanism serves several purposes. For example, firstly, scarcity. By reducing the total supply of BNB, the burning mechanism increases its scarcity, which can potentially drive up its value due to supply and demand dynamics. Next is an economic model. The deflationary nature of BNB aligns with an economic model where, as the platform's usage and also popularity grow, the demand for BNB might increase while its supply decreases, leading to potential price appreciation. And also incentive for holders. Token holders may be encouraged to hold on to their BNB tokens, anticipating potential price appreciation due to reduced supply. BNB is often compared to other gas and native tokens, especially Ethereum's native token Ether, or ETH. However, there are some key differences. Firstly, the use case of BNB. BNB is primarily associated with the Binance ecosystem, offering utility within Binance's various services, including trading fee discounts, token sales, and participation in DeFi projects on BNB chain. On the other hand, Ethereum, or Ether, is the native cryptocurrency of Ethereum platform and is used mainly for paying gas fees, or gas when paying transaction fees, executing smart contracts, and also participating in decentralized applications, or dApps. In this sense, one could say that the BNB token is more centralized than Ether due to the gas token being used on the Binance trading platform. Next up is scalability. Binance Smart Chain have been designed to offer higher scalability and faster transactions compared to the Ethereum blockchain, especially during times of network congestion. This has led to BSC's popularity as an alternative for decentralized applications, particularly those seeking cost-effective transactions. Also, token economics. So BNB's deflationary mechanism began earlier than Ether, which only started after the F2 or Serenity proof-of-stake POS consensus in January 2022. This also brought a new use case for Ether, as users can also stake their Ether with validators or even become a validator themselves, but only if they hold enough of the Ether token. The ecosystem support for BNB chain is arguably one of the best out there. So for example, while both BNB and Ethereum enjoy significant ecosystem support, Binance's strategic acquisitions and also development efforts have contributed to BNB's rapid growth as an ecosystem and also utility token. However, one of the major concerns around BNB chain is its relative centralization. In general, the more entities validating transactions, or called validators, the more decentralized a network is. Validators play a crucial role in maintaining the security and consensus of the BNB chain. In BNB chain's proof-of-stake consensus mechanism, validators are responsible for validating transactions and also adding blocks to the blockchain. To become a validator, a participant needs to stake 10,000 BNB tokens as collateral. The more BNB a participant stakes above this threshold, the higher the chances of being chosen as a validator and earning rewards for validating transactions. Currently, there are only 29 active validators out of 54 on the BNB chain, compared with approximately 495,000 on Ethereum's new 2.0 proof-of-stake update. To put this into perspective, 10,000 BNB at the moment is worth around $2.43 million. 32 Ethereum is what you need to create a validator on the Ethereum network at the moment. That's only around $60,000. So to set up a validator on BNB chain, it's around a 4,000% increase, or $2.4 million difference. On the 14th of February 2023, BNB Chain released their 2023 roadmap, where they did address this issue and say they were increasing the number of validators. Specifically, they said BNB Chain will not stop further decentralization, expanding validators from 40 to 100 slowly but surely. BNB Chain and also Ethereum are known as Layer 1 blockchains. On the other hand, networks such as Arbitrum, Optimism, Starknet, OPBNB, and many more are Layer 2 blockchains. A Layer 2 blockchain is a secondary protocol or framework that operates on top of an existing blockchain or network, often referred to as the base or Layer 1 blockchain. The goal of Layer 2 solutions is to address some of the issues of scalability, speed, and cost issues that may be present in the Layer 1 blockchain. The primary Layer 1 blockchains, such as Bitcoin, Ethereum, and also BNB, have their limitations in terms of transaction throughput and also processing times. As the popularity and usage of these blockchains increase, they can become congested, leading to slower transaction processing and also higher fees. Layer 2 solutions are designed to alleviate these problems and enhance the overall performance of the blockchain network. There are, of course, different types of Layer 2 solutions, but some common ones include off-chain scaling solutions. These solutions enable users to conduct transactions off the main blockchain, reducing load on the main chain. Examples include payment channels like the Lightning Network for Bitcoin, and also state channels. There's also sidechains. Sidechains are separate blockchains that are pegged to the main chain, allowing users to move assets between the main chain and the sidechain. This can help in increasing transaction capacity and also providing specialized functionalities. Then we have Plasma. Plasma is a framework that enables the creation of child chains, each with its own consensus mechanism, which can process transactions independently and later reconcile with the main chain. This allows for greater scalability. And next up, we have rollups. Rollups are a type of Layer 2 solution that batch multiple transactions together off-chain and then only submit the summarized data to the main chain. This reduces the computational load and also improves scalability. This is where BNB Chain's new OPBNB network comes in. The BNB Foundation describe it as the following. High performance, low cost, and scalable, OPBNB is a high performance Layer 2 solution within the BNB ecosystem, built using the OP stack or Optimism stack. Leveraging its block size of 100 million, OPBNB's gas fees remain stable and low cost, making it a great solution for widespread adoption across multiple digital environments, from gaming and also decentralized exchanges to daily use and digital collectibles. OPBNB caters to a diverse set of needs whilst delivering optimal performance. The distribution of holders for BNB token also is comparatively quite good in comparison to, say, other tokens and coins. There is no one address that holds more than 1% of the supply, meaning perhaps that whales can't dump, at least from not just one wallet. Yes, there is more than over 1% of the supply in various liquidity pools and also contracts, but no one address holds more than 1% of the supply of native BNB token. Of course, this video as well is intended for entertainment and educational purposes only. I am not a licensed financial advisor. Investing in cryptocurrency always carries risk, so make sure that you always do your own research. However, with that aside, what do you think about the future of BNB? Do you think we can return realistically to that all-time high of $650 or above? The success of the BNB token relies heavily on the success of Binance itself. And with Binance being in the crosshairs for the SEC at the moment, the price action has stagnated a little bit around $240 or so. However, if or when we can see more regulatory clarity, perhaps this will go higher. But is this enough to take it back to all-time highs to compete with other chains such as Arbitrum, even Solana, in terms of user base, speed, and everything else in between? Let us know in the comments your thoughts. Are you holding BNB as well? If you've learned anything at all this video, please do give us a like and subscribe. Also, hitting that notifications bell can be very, very useful indeed. Obviously, crypto is very fast moving. being the person that knows first, the news, that sort of thing, can pay great dividends. So make sure to turn on the notification bell as well. Anyway, thank you very, very much for watching. Speak very soon and trade safe.